Ladies and gentlemen, we have massive news for Tesla stock. Tesla is hiring several positions related to the Cybercab and specifically manufacturing, like an equipment technician for the Cybercab General Assembly, equipment technician for the Cybercab press, for the plastics, and more. At a time in which Tesla stock is down over 31% from its all-time highs, that's not something a lot of people are even thinking about right now, is what could go right for Tesla. Lars confirms that FSD is coming to Europe in just a few months, which, considering FSD is what a lot of us believe a 90% net bottom line margin for Tesla, this is going to boost Tesla's profitability, so that PE multiple that everyone screams about that is over 100 today, that should be quote unquote 50 or 60, that Tesla's overvalued, that's gonna help the valuation for Tesla. It's gonna boost Tesla's EPS. We also believe that FSD is going to enter the Chinese market literally any time now. Also being reported, Tesla made 450 Model Ys in the first 2 days of production at Giga Berlin. So it does seem like the new Model Y is ramping nicely, and it's a ramp. So it starts off low and small quantities, and then it ramps up to the same level of production, possibly exceeding the old level of production for the previous version of the Model Y. Putin calls to partner with Elon Musk, suggesting maybe a Tesla factory should go there. And I don't know how to take this news. I don't know if this is good or bad or what. At this point, should probably just not approach that. Elon Musk's security guards have now been given special authority. They can be armed at all times, which, I mean, that's good news. We need Elon to be safe out there as he tries to do right for the country. Donald Trump says Elon is doing a great job, but I would like to see him get more aggressive. Remember, we have a country to save, but ultimately to make greater than ever before. Elon Musk says, "Will do, Mr. President." It was recently reported that the government plans to get to about 240,000 government layoffs or fires, and that's about 10% of the entire size of the government, but we will see as far as a dollar amount what can actually be done here. Keep in mind, the trade-off with reducing government spending is that's less stimulus. That is a potential drag on the economy, because let's face it, when the government gives out grants, it's like giving out free money, and that does have a stimulus effect on the economy. Short term, it's like a sugar high. Afterwards, long term, in other words, it's not great for the country just to give out free money. And this could be part of the growth scare that we may be entering now. Part of this growth scare has to do with Walmart's guidance. Walmart kind of gave a warning about the consumer when they reported earnings this week. We get a lot more retail earnings this upcoming week as well. That's really going to seal the deal. I mean, if other retailers have similar warnings, the markets are really going to pay attention to that. But we also had ISM services data that weakened across the board on Friday, and every single age group as well as income demographic showed weakness. So it's not just the lower income consumers anymore. It is everyone that is slowing down their spending. And, even financial analysts and people that cover the retail industry suggest that there is a slowdown in the economy, with most of them, like 99% of them, believe we're not going to go into a recession, but we are in a soft patch. And you can actually see this news here. The US Marshal Service has deputized members of Elon Musk's private security detail, giving them certain rights of federal law enforcement agents. They can now be armed with weapons in Fed buildings and can use deadly force and be covered by the government. And here is an image of them here. As Sawyer Merritt writes here, Tesla's Cybercab's lead engineer He reacted to the claim that Tesla won't be able to offer cheaper robotaxi rides than its competitors. He just put a laughing, crying emoji. This is because Gary Black wrote under this comment or this post and says, why would Tesla be able to offer autonomous rides way cheaper than Uber when 10 to 12 other automakers will be able to offer autonomous rides on the Uber app? I don't know where 10 to 12 other automakers and autonomous rides even comes from, because where are they at? Like, are we talking decades down the line? If we're talking decades down the line, that probably consists of Tesla partnerships. As Ford has suggested, they could be partnering with an autonomous vehicle provider pretty soon, or autonomous technology provider pretty soon. Kind of alluded to Tesla without actually saying it. They pretty much said, we could partner with Tesla. So I don't see there being 10 to 12 other automakers with autonomous driving technology. But the main advantage that Tesla has is they can have a $25,000 car run FSD and do autonomous rides. That compares to Waymo's vehicles that are over $250,000. That is 10 times cheaper than a Waymo vehicle. That right there is going to bring down cost a lot and make the economics of the business make a lot more sense. And clearly, the Cybercab lead engineer says the same. Without saying it, that's what he's saying. And Joe Tetmeyer comments on this post about jobs for the Cybercab and says, well, Jeff Lutz says these job titles say a whole lot. Holy shit. Joe Tetmeyer says, you might be surprised just how far along the assembly line is. And I've shared those videos with you, but there is multiple different assembly lines being produced or built in Austin, Texas right now. A couple of them. And they are pretty far along with the robotic arms and the whole deal already installed. Now, we did recently get news that the quote-unquote Model Q, as a lot of people are calling it, the $25,000 or cheaper Tesla product, will be coming out sooner than expected. So that could be any time now we get an announcement for that vehicle. Now, John at The Rock Trading Co. on X says Tesla, oh boy, suggesting that Tesla is going to fall to this $272, $273 level. I'll tell you now, that is possible. That would be a fantastic price to buy Tesla stock. But Tesla's price does not matter. And let me explain why. As Warren Buffett once said, quote, price is what you pay for a stock. Value is what you get. That's important because the price of Tesla tells you nothing about how the business has changed. And since Tesla has fallen over 30% from its peak at $488, has the value changed? Or has it just been the price? Here's what we know. This is a post from my X account. Go follow me if you have not done so already. Tesla deliveries in European countries in January were down anywhere from 35 to 60%. China was down close to 30%, while the overall EV sector in these areas did very well. Scary, right? Well, not so fast. Context is key. Tesla is launching the new Model Y. Yes, at only a slightly higher price point than the old Model Y. Compare this to Apple. If Apple is launching the latest iPhone on, let's call it September 1st, for $1,100, but selling the iPhone 16 for $1,000 with a price point almost identical, wouldn't it be logical to say that most people are going to wait to upgrade the last month or so before it launches? Probably. So this is not a real problem. This is like an upgrade cycle. You expect this to happen with Apple right before the new iPhone comes out. Okay, you do see a material slowdown in Apple's iPhone sales before a new iPhone comes out. That's kind of what is happening right now. Besides, I would argue that a car is a much bigger purchase, so it may be a little bit more dramatic with a car. So back to value and the real question. Did the value change for Tesla? Yes, it's gotten much better. Tesla confirmed it's launching the sub $25,000 vehicle in India in Q3. That will one day be Tesla's largest market. I see India as, quote, the China market in 2018. Small at first, but grows into something massive. On that note, it is also being reported that India is considering reducing import taxes on EVs from 110% to 15%. And this is almost a guarantee at this point, because Tesla would not be setting up showcasings or showrooms and getting ready for a launch in India without a concession like this. So this is coming. Continuing on, Tesla recently suggested they are ahead of schedule on the Model Q. This is the sub $25,000 vehicle that is expected to be a mass market product. Tesla's cheaper Cybertruck version comes out this year. Tesla is launching the robotaxi, now confirmed, in June in Austin, Texas. Keep in mind, robotaxi date was not confirmed yet when Tesla was at $488 per share. So since the all-time high, this is, a new development. It seems like we've known about the robotaxi launching June 1st for a while now, but we've really only known about that for like 2 weeks. Okay. But Elon Musk said on the earnings call, we could launch in many other regions of the US this year as well, assuming all goes well with the Austin launch. Tesla is going to be mass producing Optimus this year for internal use. That will raise margins and really put Tesla's AI projects in greater focus in the marketplace. And that is why I have a $900 price target on Tesla still. Considering the stock has fallen a lot, whatever, that doesn't matter. What is the value doing? That's the important thing to watch. And it's only gotten better. And I believe, especially in the second half of this year, there's going to be a lot of attention paid to Optimus and to autonomous vehicles, robotaxis. Continuing on, I'm optimistic by mid-year, 10-year treasury yields will be 3 to 3.5%, likely freeing up more demand to borrow money. Homes and houses will benefit, including Tesla. I actually think Tesla is due for a quote-unquote upgrade cycle from the early EV adopters. We're talking really 2018 through 2022. If you bought yourself a Tesla during these years, you are likely ready for an upgrade. Conclusion. Even though Tesla's stock price has dropped sharply in recent months, the value has actually gotten better. Sure, there will be ups and downs along the way, and remember, the money is made when you buy a stock. And I think that's something a lot of people really forget. And Warren Buffett's quote tells you that. The price is what you pay, the value is what you get. You actually make money when you buy a stock. No, does that stock 10x as soon as you buy it? No, that's not what I'm saying. But if you bought Carvana at $3 and now it's $200, well, you made the money when you bought the stock because you bought good value. You can make an argument of what's value or not, but same's true with Tesla. If you bought Tesla in 2012 or you bought Tesla last year when everyone was freaking out about, Elon's comp package and all of that BS that sent Tesla stock down to $130, and you were buying like we were, you made money on those shares that you bought. The money was made when you bought the stock, right? By buying at a good deal and a discount to the ultimately fair market value. And that's important. So the lower Tesla goes, the more money you ultimately make at the buy, as long as obviously you think Tesla's going to be successful in Optimus and robotaxi longer term. Now, I go on to say, I see a path for $900 this year, and I've only grown more confident in that in recent weeks. Here's the caveat. If the economy weakens, that's the bigger problem. Corrections are caused by growth scares, bear markets are caused by recessions. So either one of those could be a bigger issue. But assuming we don't have that, I think you're stealing money buying Tesla stock at these levels. And again, nothing has changed. Besides, the business has gotten better and you get a better price to buy the stock. Not financial advice. Contact financial advisor if you're a bitch. Sorry, just an honest disclaimer. Now, also in the news today, Warren Buffett's cash pile is now up to $334.2 billion, up from Q3's $325.2 billion. So a new record high for the amount of cash that Berkshire Hathaway currently possesses. Now, there could be a lot of reasons why Warren Buffett has this much cash, and it's not something to directly be concerned about, if you will. I think you really just want to focus on the economy. Because let's face it, Doge, cutting government spending, Trump's call to Elon today to get more aggressive in that is going to have a negative impact on the economy. It is reported that the Trump administration has deported 37,000 illegal immigrants in the first month he is in office. That is going to hurt the labor market in some capacity or another. The government laying off so many people all at once is going to affect the labor market and or the economy. Now, it's going to be region by region. Some regions are going to be hit harder by this if there's more deportations in that region, or like Washington, more government, layoffs. Some areas are going to be hit harder by that, but as a collective, that is going to cause some weakness. Now, again, Walmart's guidance sounded pretty bad. We've heard other companies that have given some pretty bad consumer guidance as well. Retail sales were negative almost 1% last month, the largest decline in over a year. And the services PMIs yesterday came in well below expectations. And this is part of the reason why stocks sold off on Friday. Because you really can't have a economy that weakens too much, or it really throws the whole bull thesis for markets into question. The services PMIs came in at 49.7 versus estimates of 53. Last month was 52.9. So we were actually expecting services PMIs to get better, go up a little bit. They plummeted across all consumer demographics, age and income. It's not great. You also have existing home sales that were down 5%, much worse than expected. This is also part of the fear as well. If real estate slows down, then that can also be a big problem. Consumer expectations weakened, current conditions weakened, whereas 5-year and 1-year inflation ahead expectations rose. In fact, 5-year inflation expectations are at the highest level you have seen since 1995, I thought I heard on CNBC yesterday. But yeah, it's been since the 90s. You've been at 3.5% inflation. But this is skewed by politics. So that's important to keep in mind as well. And really why I'm sharing this is I don't know if the Fed understands that the University of Michigan's sentiment surveys, inflation expectation surveys are politically skewed. I don't know that. Hopefully, I'm confident the Fed does. But if they don't, they're looking at that data and they are not, feeling too good. Okay. And if they start to be even more hawkish, that is a problem for markets. But again, the bigger concern is corrections are caused by growth scares. Recessions are caused by bear markets. At this point, I think it is far too early to say we are going into any kind of recession. Historically speaking, recessions have grown more rare over time. And unless we get some really bad policies out of Washington, some kind of shock event, you're probably not going into a recession. These days, the last 20, 30 years, you've really only went into recessions when you have events that kind of kickstart a larger weakening in the economy. That has not happened so far. When that happens, if it happens, that would be a larger issue. But at this point, I don't think that's something we should seriously be concerned with. But a growth scare, that could definitely happen. And you're already starting to see the start of that. Now, growth scares cause corrections. You could say a correction's anywhere from 7 to 10%. And I think that's why this upcoming week will be important, because the data that we get the GDP numbers, and we get more consumer earnings reports. And if we do have concerns about the consumer slowing down even more, Tesla stock could fall more. And that's the important part. But the value has gotten better. Okay. A growth scare, it's a growth scare. It has little to do with changes to Tesla's business or changes to any business, really. It's just emotions in markets. And as long as it's not a recession, then that would be a very buyable opportunity. Now, I don't know where Tesla goes if this creates a growth scare, which you can see the path ahead towards a growth scare here, right? Elon cutting government spending, deportations, government layoffs. I mean, there's definitely a path here towards Wall Street to get more concerned about a growth scare. Okay. If GDP misses in this upcoming week, more consumer oriented earnings give us warnings. And yeah, you're going to be in a growth scare pretty quickly. And you could have a correction in markets. Now, sentiment is very bearish. We know this. The AI Investor Sentiment Survey, just not good at all. And overall sentiment is just really poor. I mean, you see this in the comments of these videos. You see this basically everywhere. Not too many people are bullish at all right now. Okay, CNN's Fear and Greed Index is at 35. It's in midpoint of fear. Even the percent of stocks trading above their 50-day moving average, only at 41.5%. Like, markets are not super optimistic, if you will. So it's hard to say where Tesla could go in the event of a growth scare. You could fall to that 310 level. I think that would be a good level to hit, a great buying opportunity. If you fall below that, then you're going to be testing that 200-day moving average at $275 per share. That is a fantastic level to buy Tesla. Considering as long as we don't have a recession, I believe Tesla will be a $900 stock by the end of this year. I mean, if that happens and you're buying at the 200-day moving average, that would be a gain of over 200%, 225% or so this year. Just my expectations. I'm not a financial advisor. I'm obviously not a financial planner. But let me know your thoughts on this down below in the comment section. I also think the new COVID strain found in China is something to watch. But until you see person-to-person spread of that, it's not really a big deal. And I think Wall Street will be very quick to get over that. So with that said, let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.